This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, November 11th, 2014. So the euro remains locked within a downtrend, and key levels to watch today are to the downside, the yearly low from last week at 123.58. A break below would open the door for a move down towards the 2012 base at 120.40, and to the top side, 125.10, the high from Monday, a break above, which would open the door for a deeper correction towards the 50-day moving average in the 127.15 area. Sterling dollar. The market is locked within a downtrend. Key levels to watch over the coming session include above 159.17, that's the high from Monday, and below the yearly low from the previous week at 157.90. Below 157.90 would open a bearish continuation and expose the 155 area further down, while back above the recent high at 159.17 would open the door for more of a correction towards the 160 area. Dollar yen. Dollar yen has raced higher to another 7-year high and a 2014 high at 116.10 ahead of the latest minor pullback. Technical studies are well overbought, which does warn of a correction over the short term, but a break below 113.85 would be required to trigger that correction. Euro Swiss. Euro Swiss is inching closer to that critical barrier at 120. A break below 120 would open a downside acceleration towards the 119 area. Inability to break below 120 would potentially open the door for a bullish reversal back towards the previous support at 120.45. But a break above 120.80 would really be required to take the immediate pressure off the downside. Aussie dollar. Aussie dollar is locked within a downtrend following a recent break of bearish consolidation, which now exposes 84 further down. Over the coming sessions, key levels to watch are above, looking at 86.82, 86.83, the high from Monday, while below the recent yearly low from the previous week at 85.40. A break back above 86.82 would open the door for a more significant correction to the top side, but would not compromise the bearish structure. Only above 89.11 would compromise the structure. Dollar CAD. Dollar CAD remains locked within a well-defined uptrend, with the market recently posting a fresh yearly high at 114.67 on the 5th of November. Any setbacks are viewed as corrective and should be supported ahead of the previous higher low at 111.22 from the 29th of October, in favor of fresh upside back above 14.67 and through 115, exposing 120 further up. Kiwi dollar. Kiwi has recently broken down below bearish consolidation. Key levels to watch over the coming sessions are to the downside 76.60, which is the recent yearly low from the previous week. A move below 76.60 would expose a measured move objective down in the 7400 area. Back above recent highs at 78.23 would suggest that the market is still looking to correct a little bit higher before a bearish resumption. Only above 80.35 would negate the current bearish structure. SPX 500. The SPX 500 continues to grind to fresh record highs on a daily basis. The market would ultimately need to break back below 2002, the low from the previous week, on the 4th of November, to trigger the onset of a much-needed correction following over 10% move since mid-October. However, below yesterday's low, that's Monday's low at 20.25, would open the door for the potential correction, but until then, the market remains firmly locked on fresh upside and looking towards next key highs at 120.50. Gold. Gold has been locked in a consolidation following the recent drop below 1180 all the way down to the 1130 area. But given the break below 1180, there are deep setbacks that should not be ruled out towards a measured move of 1180. A break back above recent highs at 1178 or 1179 would be required to take the immediate pressure off the downside, but really only back above 1256 would compromise the current structure. That's all for today. Have a good one and see you back on again tomorrow.